What are the markets pricing in terms of a potential trade war? There appears a widening gap between the US and some of its biggest trading partners. Where will it all end? Well, joining us now is Charles Hecker, Senior Partner and Specialist Global Risk Consultant at Control Risks. Charles, good to speak to you. Why is the US doing this? Is it all to ensure that America's first?
Well, thanks very much for having me. I think we've got to cast our minds back to the presidential campaign. And part of President Trump's populist appeal was the promise that he made to try to reorganize trade around the world, which he felt was built to America's disadvantage and to the disadvantage of his core voters, this base that he refers to all the time. And so one of the reasons why this is happening is President Trump is trying very hard to fulfill one of his campaign pledges, and he's trying to fulfill that pledge, we think, prior to the midterm elections coming up in November of this year. President Trump's record on coming through on campaign promises, viewed objectively, has been mixed. And so if the president can rewrite trade relationships with China and some of the United States' other significant trading partners, he'll be able to go to the electorate and say that he scored a victory on their behalf.
Well, which countries are the US targeting? I mean, first it certainly seemed to be China, but last week America's closest geographical neighbour, Canada, was swept up into the latest targets by President Trump. Who is in the crosshairs precisely? There presumably is a target here for the trade talks.
Well, the primary target in terms of both the rhetoric and some of the activity has always been China. The United States has always positioned China as doing the most harm to the global trading system and to the American worker and the American economy. And you hear President Trump constantly talking about the trade imbalance between the United States and China. Talks with that country are going longer than anticipated. And you hear the president saying things like, whoever expected that trade could be this difficult? And what's happened in the interim is that the target has shifted, and that the freshest and the newest trade sanctions actually have been applied to the United States' closest allies, both sort of geographically, economically, politically, and in the sense of whose values we supposedly share the most. The hammer has dropped on Mexico, Canada, and the European Union, while nothing has really happened yet with China.
So what's President Trump's end game here? I mean, surely he understands the cost of a full-blown trade war. Is this just about brinkmanship? Is it taking it to the 11th hour before something is hammered out, as you say, in a new global trade order?
Well, we're not entirely sure that the president is aware of the ultimate costs of these trade conflicts. The president can score what looks like a political victory, and in the short term, what might be a brief economic victory. But as these trade conflicts play themselves out in the longer term, the economic costs may actually pile up. The president is going for what looks like transactional wins, when actually international trade is much more complicated than that. And shifting away from a global, rules-based trade order that everybody participates in on more or less equal footing, and when everybody understands the rules, shifting away from that runs the risk of actually creating more damage than opportunity. So we think part of this is short-term political victories in terms of the upcoming midterm elections, in terms of keeping his base happy, without necessarily a fully calculated view on what the long-term costs are.
In terms of global uncertainty, there's normally a flight to safety, traditionally the dollar and the US economy, but there doesn't seem to be any safety here at all, anywhere. I mean, all of a sudden, the globe is now one big economic event, if you like, and it seems like this could ultimately bring down the entire world. I mean, do you see any safe havens here coming out of this?
Well, first of all, I think, we've been in the risk consultancy business for a very, very long time and have to say that the doomsday scenario or the outlier worst case scenario doesn't always come to pass. And while we think that there is room for periodic trade skirmishes and periodic trade conflicts, we don't forecast a massive global trade war in the way that we conceive, having empty shelves in the groceries or in grocery stores or empty tanks at petrol stations. We still think that when it comes to the big decisions on global economic trade, that even the United States and China, the European Union, and all of the sort of G7 and G20 countries, that at the end of the day, they will work as rational economic actors and will not do anything to damage their own self-interests. And we also think that that will preserve some of the basic architecture of the global financial system in the short and certainly medium term, which means the dominance of the dollar as a unit of trade and as a global benchmark, and certainly the prominence of dollar-denominated U.S. debt around the world. Don't forget that China is the largest holder of U.S. debt, and China won't do anything to devalue its holding in U.S. Treasury bills or in any other debt instruments like that.
OK, Charles, look, we'll have to leave it there, but thanks indeed for joining us. Charles Hecker is Senior Partner and Specialist Global Risk Consultant at Control Risks. Subscribe to IG for educational content, company insight, financial analysis and expert commentary.